Tuur, welcome into Blue Collar Bitcoin. I think the last time we interacted, it was at some Miami Beach club at this soiree deal. We were smoking Cuban cigars, probably blowing them straight in your face. There were fire jugglers. There were chicks in a pool and giant see-through balls doing whatever.
BitBoy was, slinging shit coins at the back of the beach.
Yeah. So, that was a good time. It was fun interacting with you, putting a face to the name. But I think this being in our basements in the friendly confines of each of our homes is maybe a little more up each of our speeds. We appreciate you. Thanks for dedicating some time this morning.
Yeah, you're welcome. You're welcome.
Yeah,
it was fun hanging out that night. I think it was like whale night at a Miami conference. Yeah,
it was an interesting being back there, seeing how the sausage is made a little bit. It's fun. We actually got to speak to Adam back a little bit too, and that was really cool.
Yeah,
it really was to see him in person.
In true back fashion, he was wearing like cargo shorts and had his backpack, and you can spot a humble pleb from a mile away, can't you, Tuur?
It's like literally since the first time I ever saw Adam, like it's always like with his backpack, and he's always going to be the same.
Tuur, I have long appreciated your content. I think, as I mentioned before we clicked record here, it was you and Andreas Antonopoulos that I was reading pretty heavily in 2017 when I started understanding what was going on here, trying to finally put those beginning building blocks together to figure out what makes Bitcoin different from all these other things that are proliferating in the space at the time. And I just wanted to affirm that I really appreciate, even like you did a lot of TA stuff. You did a lot of analysis of the price versus the previous bull runs and all of that, which I definitely appreciated. Definitely shouldn't have traded at all, but I did. And, ups and downs on that. But I've learned since then, it's better to just DCA, especially for me. I'm sure there's people out there that can definitely have an edge doing that kind of stuff, but it's not me. But I guess what I'm saying here is your pieces and the Adamant Research pieces that you've put out over the years have been some of the most signal-packed content I've run across. And so anyone listening out there that isn't reading these things or isn't following Tuur, definitely do that, because it is, you've been on the money, especially with these Adamant Research pieces over the years. And the most recent one, which Dan and I both dug through intently before this talk, and then a whole bunch of the other stuff as well, but really, really good stuff, signal packed. We're going to definitely unpack some of that, but I would like to hear some of your origin stories. You mentioned in a piece that you did, it was a presentation in 2013. It was called 7 Lessons I Learned in Bitcoin. And there were a ton of really good, that aged extremely well in my view.
Sure did.
Extremely well. Tell us a little bit about your exploration of South America. You said that when you first ran across Bitcoin, it was in Buenos Aires. How did you get to South America? What was the impetus behind that? Give us a little bit of that backstory and how this all kind of dovetailed into Bitcoin.
Yeah, honestly, the short of it is probably paranoia. I was paranoid that because I had been learning about history of banking, business cycles, and I was really worried about a big crisis in Europe. And my parents had always taken us travel all around Europe. We'd drive around with the car to Eastern Europe even. And so, when I was in my 20s, I started thinking like, man, what am I going to do? Like I'm starting to get employment online. Like maybe I need to look around the world and see where I want to live in case of a big crisis. And then also I was actually writing for, I was author of a financial newsletter. So I also felt like as a way to like find value for my readers, like let's check out Latin America, because at least there they know how to survive inflationary crises. Like they just happen all the time there. And so that really was like the motivation. Like I went to Ecuador, I went to Uruguay, I went to Argentina, Chile. And in Buenos Aires, I met some people that I'd met online. They became friends. And they were like literally saying like, dude, like you gotta look into Bitcoin. And we were both like libertarian. Like we had a bunch of values in common. They're like, you gotta look at this Bitcoin thing. And they were in it already. Like this is 2011, and they were like they had set up mining rigs in their basement. This is before specialized mining chips existed. Like they had just graphic cards that were running the client and mining Bitcoin. So it was just the perfect introduction to Bitcoin. And then I forget, because I made 2 trips to Argentina. One was like 2 years later. So sometimes I mix things up. I think it was on the second trip that there was a guy, Santiago City, who also early Bitcoin adopter. There was this, that was the second time, because the Bitcoin meetup actually had some people. Like the first one was like 5 people at a barbecue. But the second one, there was like maybe 80 people. He was like somewhat of a like low key online celebrity. And so he was talking about the Silk Road, like in Buenos Aires. He was saying like, my people, like he just had seen the light, is like, if you want to order something, any substance from anywhere in the world, you can do it with Bitcoin using the Silk. Anyway, I took a little video of that, and then my friends afterwards said like, yeah, maybe better.
So you guys did that. Mushrooms, and then you got into Bitcoin. Yep, got it.
As you do, as everyone does.
I deleted the video, and of course he didn't say anything illegal. Of course not. But anyway, so yeah, that was a really amazing introduction. The right place, the right time. Because I was also looking for something to write about for my audience, like how to, even if you can't move across the world, like what can you do to protect yourself from an inflationary depression?
Right. Before we move on, you said something that really interests me. You are a libertarian from Europe. I think the perspective on that from my position is like, you've got to be an extremely rare bird. Am I completely misreading that? Or are you one of the, how many libertarian, what does it look like out there? Are there more than one? Is there more?
Oh man, that's so funny. That's the first time I've asked that question, and you're right. You're spot on. It's a rare breed. We put together the Rothbard Institute in 2006, and we started like, I think even before that we had like Phaedrus, which is like a libertarian. Our idea was like, let's make a libertarian student organization, but we never got beyond like 5 members. And I remember distinctly meeting a guy who actually lives in Texas now, but he was in his probably like late 40s, and talking to him and realizing like, oh my God, this guy is Flemish and a libertarian. It was like my first like adult libertarian that I ever met in my life. But so yeah, it's if you look at the political spectrum, like it's basically, like the most right-wing party is much more left than even a centrist in the US, so it's very rare to, but then the weird thing is that because it's so rare, the people who are interested in this stuff, they actually are more fearless to think from first principles. They're less kind of like moderately libertarian. It's more kind of like, yeah, let's do this all the way. Kind of like when, the Iron Curtain fell and communist people wanted to learn about the free market, and then they went to reading Rand and Rothbard, and it's just
right.
So it's pluses and cons. Like in the UK, there's a lot more libertarians, but actually people that are more radical are rare in the UK.
I'm going to quote a section of that 7 lessons piece Josh referenced that I just pulled up here, because it juxtaposes Europeans versus Latin Americans. And then I'm going to introduce a thought about firemen who were around. So you say, I'm going to quote you here. The European outlook you call as pronoia disease, like the opposite of paranoia. And you say the general outlook is politicians will secure our deposits. They will find a way to contain inflation and keep the banks open. And the government will also find a way to keep paying our pensions, our healthcare, my child's education, etc. I find that young people in Latin America suffer from a lot less of this pronoia disease. They instinctively know that the answer to the question of their economic well-being is not in the decision of some government official, but in their own entrepreneurship, in their own imagination, in their own effort and initiatives. I see, Josh, and this isn't not just to pick on the circles we run in, but to take a slice out of our world. If you're a career firefighter, say in our state, there is this dramatic implicit trust in current financial programs, specifically stuff like defined benefit plans. We're told we're getting a pension. Like, it's going to happen. It's legislated. We've been guaranteed. What do you mean there's a risk there? this is a deep theme that I want to hear you elaborate more on, because I think that many Bitcoiners are those that don't suffer from this pronoia disease. They have a healthy skepticism of the institutions above them and the fact that they're going to inevitably provide for them. Talk a little bit about that juxtaposition you see between Europeans and Latin Americans, and then any other thoughts you have on that idea.
Yeah, so I believe pronoia is defined as the belief that there's a conspiracy in your favor. That basically, like, there's this group of people that are working really hard to make you happy always, and so yeah, then you can rest easy and believe all that. Yeah, and in Latin America, it just, you can't survive economically if you believe that, because it gets betrayed every day. You see all these hollow promises that just aren't kept the next year or the next month. Whereas in Europe, because there is that kind of legacy of wealth, and there was a lot of savings built up after the war, like 1950s, 60s, 70s, like a lot of economic capital was built up. And so that means in the later era, when the welfare state grew and grew, politicians for a while could make up on their promises, because they would just issue more debt and be like, oh yeah, like, look, it's going great, and we're paying out the pensions, and of course not mentioning that, well, the pensions that we're paying out now are not saved up by the same people. We're just using money from the young people to pay the old people right now. Anyway, so that unsustainability is becoming a lot more clear. And, I feel sad. Part of why I've been working to warn people about this is kind of like from a mental health point of view, because it's really shocking if you've been in this pronoia world of fantasy for years and years and years, that all of a sudden your pension is gone, like you're not prepared, or
Right.
Whatever, the child welfare program stops, or the price of eggs triples, simple things like that. So I just
Sure.
find that it's a lot easier to have a happy life if you've mentally prepared for some of these things.
Yeah, and in society as a whole, as a whole, you get a softer landing that way. Like if everyone goes from one day assuming all of these things, Social Security is going to be there for me, my pension's going to be there for me, X, Y, and Z, my private pension, and all of this stuff kind of fails at the same time because fixed income collapses, and that's what this stuff is massively invested in. Now you've got just chaos across the land instead of having people, like, warning people ahead of time, getting them in their own, benefit plans that they, like a 401k or something, where they have at least some kind of nest egg on the side. They can give them some other reassurance in the case that happens. It's kind of like preppers, like crazy preppers in the US that are loading their basement full of food. Like there's a rational way to do that. Like have 30 days worth of food in case the power goes out for a little bit. But when you're loading your base, there's just a good happy medium, I guess is what I'm saying. And you can do that and still live a pretty productive, decent life.
The other thing
go ahead. I'll
sorry. The other thing I just wanted to chime in here on is that I think a lot of people dismiss this, what they would categorize as fear mongering, thinking that these things are going to evaporate overnight. See, Social Security hasn't gone anywhere. Or in the case of a firefighter, see, the pensions are still paying out. And I think it's worth noting, these things are very likely to just phase out insidiously. So you are probably still going, especially if you're a firefighter and you can play this whole hero card and you've got tons of taxpayer support to at least keep the thing somewhat intact. It's very likely in my mind that you're going to get paid out something remotely close to the numbers that you're expecting. But the buying power of those numbers is going to be significantly diminished. And Josh, we are currently living through the first several years of us watching retirees lose tremendous buying power and not even notice it. Some of the guys that were here when I started, and I've only been on 7 years ago, that have retired, the amounts that they're entitled to are buying far less. And it's happened very, very quickly. And that, I guess the tragedy, but the benefit is that this is becoming more and more obvious. People are starting to realize that you need to hedge out of this systemic risk because it is there and it is actually being manifest.
Yeah, and the Titanic is actually a pretty good metaphor because, you could kind of see what was going on with the ship for a while before it actually sank. And it's true, a lot of the lifeboats went out empty. or nearly empty in the beginning. So it's not like there's not enough room for people to move in and protect themselves. Actually, there is. It's just that, actually, it's good for all of us. The more people are warned, the more people start taking steps, the more equally this the savings are going to look like once we're on the other side of the fiat paradigm. Because
Right.
yeah, like it's totally what you're saying. Like I've never believed that they'll stop paying out the pensions. It's just the money is going to be worthless. So it'll
Yep.
they'll always keep printing enough money to cover everything, but of course inflation is going to run way faster than they will keep up with wages and pensions.
Yeah, and I think that's the concept that so many people miss. In nominal terms, yeah, you're going to get your pension, but in real terms, in real purchasing power, it's going to be massively hampered. And that's why we beat on this drum so much, and we do our little part that we think we can do to help the middle class get onboarded to some of these lifeboats, at least from whatever way we can. Try to build a narrative here that can help people understand why it is so important that they should at least have a hedge position in Bitcoin for their financial life. There's one of the things
I don't know if you saw, but that's what I mentioned in the. It's funny because you guys are firefighters. That one of the suggested ways of looking at Bitcoin is think of it as homeowners insurance for your financial portfolio, and then because people don't expect their house to burn down, but they do have fire insurance. And so it's similarly, Bitcoin is going to pay out a large amount if the inflation burns down your portfolio.
Yeah, absolutely.
That's my hypothesis, at least.
Yeah, no, I think the three ways you broke that down, we'll get to those in a little bit, but those were succinct. I think they were really, really good categorizations of how to view this, how to move your way into it, and if you want, how to potentially retire early. Before we move off your presentation in 2013, you said something else in 2013, which was really eye-opening, especially back then. When I think the price of Bitcoin, I looked it up on, it was like December 7th, 2013, when you did that talk. It was $650 or so. And you said, we shouldn't be afraid of estimating the future potential value of one Bitcoin in the range of 100,000 to 1 million. In other words, the risk reward ratio of Bitcoin is still extremely positive. The biggest hurdle Bitcoin has overcome. Oh, sorry, I'm reading too much. Anyway, the point was there, you were calling between 100,000 and a million in 2013, which had to be absolutely feeling preposterous to a lot of people then. A hell of a lot less preposterous now. Has that range changed for you at all? Do you still feel like that's a pretty rational range for this to end up in the next decade or so? And how did you feel about saying those numbers back then?
Yeah, absolute numbers make less and less sense nowadays. Like I could be saying Bitcoin is going to be $1 trillion. Like, if it all depends on the inflation. And so you can kind of like look at how the wealth is divided in the world. And I think some estimates are that there's like $500 trillion worth of global wealth. And some of these things are just hot air and they're going to evaporate. You could say maybe Bitcoin is going to be 100 trillion, like maybe 1/5 of all the wealth I find it hard, like once you push beyond that, it's kind of like, really, like how can money be worth more than half of everything? Like that's pushing it. But if you're thinking like 10%, 20% of everything in the world, yeah, why not? So like estimates of like a $3 million Bitcoin is actually not crazy in today's dollar value. 3, 5. Somewhere between 1 and 5, something like that.
Just to make sure that we're on the same page, with that, you're talking about $3 million worth of purchasing power as it stands today, not just $3 million because it all hyperinflated.
Yeah, exactly.
You know what I'm saying? Yeah.
No. I do mean, and again, this could take. Because we're talking about almost like a shift in religions. Like it's really a big paradigm shift. So it might really take a generation. Like this might be, our kids or maybe even our grandkids that are looking at purchasing power like that. But then again, the thing is also like we're not operating in a vacuum. Like if Bitcoin was Bitcoin and we were like in the 1950s or something where like fiat hadn't gone crazy, then maybe the growth would have been a lot slower. But things are, I think they're just. The meltdown is not very far away, I'm afraid, and in the fiat world.
How has for someone that's been in as long as you have,
Mm.
how has the trajectory gone compared to what you expected? Like, and this may be a tough question to answer, but if I had told you when you gave that talk that we'd be sitting at the valuation we are today with the people talking about it today, would you have said, that's about what I expected? Maybe that adoption's slower than I expected. That's more dramatic than I expected. Put yourself back in those shoes and think through kind of where we are today in comparison.
Yeah, I remember 2020 feeling very far away. So if I would do projections, it would be like, oh, in 2020 maybe, you know, like so.
Yeah.
I might have said like maybe 100,000 by 2020 or something like that. I don't think I would be that surprised that we would be here, although I would be surprised that we went to 65 in what was it 2021, and that we're now only at 30 2 years later. This is a long bear market, so I would be more surprised at how it went rather than where we're at today. But yeah, back in the day, it was like it's basically the same thing. Like if you think from first principles, like Bitcoin is either gonna win or it's gonna lose. Like I never really thought that we would have 100 different monies and that Bitcoin would like maybe have 1% of all. That doesn't make sense. Like there is so many network effects when it comes to money. So then you just think logically. It's like, all right, well, what if Bitcoin wins? It's of course everybody at the time was saying it's going to zero, and that's kind of boring. Of course. What's important is to find, are there any flaws? Are there any technical flaws like that? But to kind of keep talking about like, oh, it's going to zero, and I would always listen to those people and try to see what arguments they had and try to steel man my own like theories, and that's part of why I've been writing about it so much. Is that I just wanted to know if I'm not crazy to have these ideas.
Folks, we're going to take a moment here to announce our newest partner here at Blue Collar Bitcoin, and that is Heatbit. Josh and myself, Dan, found this product at Bitcoin 2023, and it immediately stood out to the two of us. Heatbit makes a badass 3-in-1 device. It's a Bitcoin miner, a heater, and an air purifier all in one. This puppy uses the same amount of energy as any regular heater, and it generates $20 to $25 worth of Bitcoin every month you use it. It's incredibly aesthetically pleasing. Dare we say sexy. It uses cutting-edge tech with 5-nanometer mining chips, and it's compact and quiet. To top it off, the price point is beyond accessible, starting at just $299. Earn passive income in Bitcoin while heating and purifying your home, and control the entire thing from a sleek and easy-to-use app. Go to heatbit.com, that's heatbit.com, and start hashing at home. I think your point about this playing out over generations is really apt, and it's something we talk about quite a bit on this show. I do think that there are people that need to ask themselves, are they low time preference enough for Bitcoin? For me, the last, we'll say 3 years, what it has done for me is in some ways it has elongated the time frame. I agree that when we were pushing into the 60,000s, Josh and I both lost our mind to an extent because we put in, let's call it the 1,000 hours of research at that point and spent years looking at it, and you see the price moving and you start thinking, this snowball is moving downhill very quickly. The last few years, I'm not saying that can't happen. I'm not saying that there won't be dramatic moves, but I think it's caused me to take pause and take a step back and think through the time frame I'm looking at. I'm as bullish as ever. I'm as enamored and captivated as ever at the implications of Bitcoin. And I think there are some signals that are just remarkable about who's talking about it and how it's entering public discourse. But having said that, there are things that could happen. There are dynamics at play that could cause this thing to work itself out over not years, maybe decades, right? And so you need to kind of sit there, and that factors into position size too. Are you ready, willing, and able to wait? Let's throw out a number, 20 years for this to reach the valuations you expect. And I think that should come into play for people of different ages and different mindsets as they allocate here. A question I have that I'm curious is, what do you think is the biggest hurdle Bitcoin has overcome since you've been involved? And what is the biggest hurdle that you still see ahead for Bitcoin as it marches on?
Yeah, I mean, the obvious one, of course, is adoption. Like Bitcoin didn't have adoption, now it has adoption. I think we're maybe talking about 7 to 10% of the population in advanced economies has some exposure to Bitcoin. I could be wrong, but I feel like it's in that range. Like we're at the, it's that same feeling of like the internet in 1995, where like everybody knows what it is, and a bunch of people are very actively involved. So it has that feeling, and I think surveys would probably confirm that. But so yeah, that feels like a bit of a cop out to just say adoption. I think the biggest challenge was in 2015, 16, early 17, the Blocksize Wars.
Yeah.
There's a great book about it, which I'm embarrassed to say actually I haven't read.
It's
but
good.
I know Jonathan.
It's worth reading for sure.
Fantastic researcher, and it must be good. Like all his other research was just top notch. And so, but I also, it's like I lived through that whole thing, and so I will definitely read it at some point. But yeah, so basically, that was really the only time that I can remember that there was a big push, a very substantial push to try and change Bitcoin's constitution, to really try and change some of the very basic rules that Bitcoin operates under. And it's a kind of it's a one of those clauses. It's not, obviously not explicitly, there is no constitution, but there are certain values that are embedded in the code and in the white paper and in the cypherpunk movement. And one of the values is that is censorship resistance. Basically, that you want to have a network that can't be attacked very easily. And so that means that the trade-off leans towards being conservative in terms of how resource intensive it is to run a full Bitcoin node. And people always think like, oh, but the blockchain size is only, I actually would have to look it up, maybe like 500 gigabytes today or something. So we can let that run because it's, what is it, $100 for a 1 terabyte drive or something? But the bottleneck is actually censorship resistant bandwidth. So because you have to relay all that information up and down the internet, and you might be in a communist country or a country where there's censorship. So it's censorship resistant bandwidth. And that's where the whole argument comes in to keep the blocks small. And so at the time, these Bitcoin startups they wanted to grow fast, they wanted to expand, and they didn't like that all of a sudden we saw transaction fees that were climbing and making it harder to like buy a cup of coffee with Bitcoin because Lightning wasn't really there yet, the Lightning network.
Right.
So that was scary, to see like a lot of Bitcoin startups and miners all band together to try and, really crank up the block size and have a hard fork and crank up the block size.
Yeah.
And so the fact that we overcame that is huge. It was an enormous precedent. It's like a civil war and we survived it.
Yeah. We were on the sidelines back then having very little understanding of what was going on. I remember, I don't know if it was like September or October when the SegWit stuff happened and the split happened. It was wild. And I had no idea what to do or what to think about it because I was so new to the space. But after, grokking it 6 months to 8 months later, realizing the gravity of what just happened, it was pretty substantial. And I wish I could go back and understand it the way I do now, but you just can't do that.
It shook my understanding and conviction, to be honest, because it was really early. And I remember, Josh, you explaining it to me. I can remember you being like, Dan, we're going to get like these other coins. Like it's going to, and none of this made sense to me at the point. And,
right.
and I remember thinking, this just sounds like a clown show. And I say that because folks, people still have that thought. If you go too deep, too quick without context and someone doesn't have full understanding and you start explaining, consolidating UTXOs to somebody that doesn't even know how to cold sort, we could think of tons of other examples. It freaks people out. Like you need to give them baby food until they can get the bigger context. At the higher level, Bitcoin is remarkably simplistic and functional and easy to use and scalable and all that. But if you give people too much too quick and you just vomit into their mouth at some party, it could scare them away. And I remember that could have had that effect on me. And I think it probably did hamper my interest in taking a bigger position size, which honestly, in fairness, made sense back then. There were more unknowns. I think people that entered, say, in the last few years, even from our history tour, we weren't around when you were, but even like the ecosystem has changed so dramatically since 2017. The narrative surrounding Bitcoin, the adoption, even the altcoin conversation, like the advent of quote unquote Bitcoin maximalism just was in a totally different space, even back in 2017.
Yeah, because from a technical point of view, like engineering wise, I was never worried that these alternatives. So I maybe just to back up for the audience. So like a hard fork is when you tweak Bitcoin's code to the client to such an extent that it no longer talks to all the other nodes in the network. You're basically making a new coin with new rules, but you don't tweak it so much that the private keys don't work anymore. So anybody who has a wallet with a private key can then access their coins on the old network, just like always, but also all of a sudden can access these new coins on this weird little new network that you're booting up. And then, and that makes it confusing. Like all of a sudden you have like access to two coins, like there was Bitcoin, and then the branding as well, like because they were trying to hijack the Bitcoin brand, so they would call it Bitcoin Cash and Bitcoin Satoshi's Vision, and like there were all these forks. Like from an engineering point of view, I was never worried because it was very clear that the Bitcoin core developers, they knew what they were doing. They didn't waver. The people that had the most skill to keep everything stable stayed with just Bitcoin. They just stayed with the Satoshi's rules, so to speak. And then it was more the opportunistic developers who switched, who were hoping to basically it's a pump and dump scheme, right? You're trying to build up this new story and saying that the old one is going to be obsolete. I mean, of course, to be fair, some people really were misguided and really believed that this was the future, these bigger blocks. But it was a huge PR war where there was intimidation going on. And actually, up to then, it's a little bit like if people are familiar with NOSTR today, like NOSTR is very similar in how it feels to the early days of Bitcoin. It was kind of like it's like innocent. There are no wars going on. There's not a lot of beef. There's not a lot of money going around. And so weirdly, it was like the loss of innocence in Bitcoin, where all of a sudden there were these very aggressive, manipulative tactics that were used. And so that's when people like Samsung Mao came to the fore to actually start speaking for Bitcoiners, because there was so much abuse happening, like just insinuations, all kinds of weird psychological attacks, and so in a way we needed our own army. And that's where the Bitcoin toxicity comes from. Bitcoin maximalists, like that kind of toughness comes from that period where, I mean, I've had friends who were physically intimidated at Bitcoin meetups by like these big block hacks, people who
you get beat up at a Bitcoin meetup. You gotta get in the gym, man.
Not beat up, but intimidated. Yeah, and like even death threats, and it was
crazy,
scary times, weird times. Yeah.
When I look back on that period of time, I remember understanding that I can split Bitcoin from Bitcoin Cash using some obscure wallet that I found. And I remember absolutely shitting my pants because I'm on some website learning how to do this that I'd never heard of, not knowing if these people are scammers. Now I'm sending my Bitcoin to this wallet so that they can split it for me so I can take it out. I remember just absolutely thinking there's a very good chance when my Bitcoin goes to split here, I'm not getting it back. There's a very good chance. But luckily I did. And then the other thing that scared the pants off of me was immediately, well, maybe not immediately after the split, but I'm sure you guys remember, Bitcoin Cash went to like 50% of the value of Bitcoin very rapidly.
Yeah.
And I was crazy. Like, I'm sitting there looking at this like, holy shit, is this going to overtake? So I'm kind of riding the fence at that point. Like, what do I do here? Do I sell this shit? Do I hold on to it? So I held it because you don't want it. You just had your bets, you don't know what's going to happen here. I ended up selling it for probably less than half of when it went down to maybe 25% of the price of Bitcoin. But that was a really, really rough. I mean, we were in some serious swells back then watching all of that play out. And it wasn't easy it was not easy to parse through as somebody who's entering the space. And while we're on the topic of these, do you have something else to add to that, Dan?
I was just going to say with the Blocksize War deal, it continues to hit me over and over again. And by the way, the Blocksize War book is outstanding. Everyone should read it. We'll link it in the show notes. It's so well done. And we need to have him on, Josh. We've been meaning to do that for a long time. But the significance of that period continues to hit me over and over again. Had it gone the other direction, I really think the entire future of this project was completely fucked. And it makes me think of I forget where it was. I was trying to find it here on Twitter. I couldn't. You responded to somebody that was calling Bitcoin like boomer coin and there's nothing to build on it, which isn't true. But you basically, you just saying Bitcoin doesn't change good. That is the entire value proposition here, folks. If this thing changes, if the base layer consensus rules start to change, this whole project is completely out the window. And that is so paradoxical in a 21st century tech environment where people are just used to moving incredibly quickly and breaking fucking everything. And here comes this piece of China, this robust piece of anti-fragile China that we set in the living room. And we say, don't touch this thing. Leave it alone. Put whatever the fuck you want around it, but leave it alone. That is the whole point. That is what differentiates this from everything else and gives it the potential to do everything. It is Bitcoin's unchangeability that gives it the potential to change everything. That takes a long time to arrive at that conclusion. At least
well said, Dan.
Yeah.
Well said.
Josh, go ahead. You were.
No, while we were on the topic of talking about Bitcoin Cash and altcoins, in the past tour, you've recommended that people kind of hedge their bets or buy some altcoins in maybe 2015 in that range. You mentioned that it's not a bad idea to have some alternative currencies just because you don't know what's going to happen. Some of the major cap ones, and you've since changed your mind. Specifically in your last piece, you urge people not to waste their time and energy and money on altcoins. Can you maybe elaborate on what it is that changed in that 4 or 5 year period of time, actually more like 7-year period of time, between when you thought it was a decent idea to have your bets hedged in altcoins versus now when you think in the crypto space, quote unquote crypto space, Bitcoin is the only thing that's worth your time, effort, and money?
Yes, I wrote it down and I want to answer it, but would it be okay if I just harken back quickly to our conversation about the Blocksize Wars? Because I was just remembering that one of the things that made it so scary, that whole idea of like Bitcoin splitting and all of a sudden bigger block Bitcoin maybe is going to win, is that actually we had that parallel universe of Ethereum that was up and coming, and where they actually had a smart contract, the DAO. You can look it up, THEDAO, the DAO. Massive amount of money went into the DAO because it was it had a promise of profit and blah, blah, blah. It was all a bit harebrained, but really, like, I think they put about 7% or something of all Ethereum into that one contract, and then it got hacked. And basically the core developers, what they did is they created a hard fork and bailed out the whole network. So they created a new coin and decided then to give everyone a bailout in that new environment. And so the old Ethereum still exists. It's Ethereum Classic. So it's just a shell of itself because all the developers moved. And so it was weirdly like this parallel reality where the bad guys win. And I'm not saying that, it's evil for them to want to do that, but it's so dangerous to create a precedent where you're going to bail out companies or, you want Bitcoin to just be boring and objective and kind of like gold. Like you're not going to change the physical properties of gold just to rescue some company. So anyway, I just wanted to mention that because I feel like it does tie into talking about altcoins in general. And I've been very vocal about being critical of Ethereum for years, because in my opinion, they represent this Silicon Valley ethos of like move fast and break things, which is not how you want to think about Bitcoin. Like Bitcoin is like you're building a nuclear power plant for the first time in the world and you don't want it to blow up. And so you got to really be extremely cautious like that. Or it's like, you're building the rocket that's going to go to the moon for the first time. Like you need a lot of padding. And you don't want to move fast and break things. So anyway, that as a prelude to the altcoin discussion.
If I could just add something there, it's just Bitcoin is reality. If 5% of Bitcoin gets stolen from somebody, there is no one that's coming to save you. This isn't where no one's going to hard fork Bitcoin to save that 5%. Like it's as if your gold got stolen out of a vault. I'm sorry, but we just can't conjure the gold back for you. You either need to go figure out how to get it back yourself. It just isn't going to happen. Whereas in the world of these altcoins where there are entities or people that are in charge who can manipulate or can change things, it's not reality. Like it's a fugazi where people are in control. It completely disregards the entire reason for this stuff to exist in the first place, which is to keep the control away from, the hands of people generally. Like that is the point of Bitcoin. It's to keep central planners out. It's to keep people from manipulating. It's to keep human action, or I'm not human action isn't the right way to put it. Just human manipulation out of our money. That is what Satoshi's original intent was. And by doing what Vitalik did,
a boring gray metal. He's like, imagine Bitcoin as a boring gray metal that doesn't have any industrial purposes. The only difference is that you can send it through a communications channel. Like, would it get any value? So yeah, it's he saw it as like inventing a new atom on Mendelev's table, like in the digital world. Absolutely. So yeah, about those, it's true. In 2015, I wrote a report, had a position for the Bitcoin rally, and in that report, I was like, when you invest, you buy Bitcoin, but you might also want to buy a little basket of altcoins. I even had like a little allocation scheme where it was like, allocate this much, and that was before the big altcoin bubble that came in 2016, 17. Yeah, I mean, I say altcoins like that's like the old-fashioned way of saying it because it's like alternative to Bitcoin, but most people nowadays they speak about crypto,
Right. Also pre-Lightning Network. I just wanted to add, this is pre-Lightning Network scaling too. Completely different climate that if you never lived through, there wasn't a solution for scaling at this point and throughput.
Right. Or privacy.
Yeah, I mean,
privacy was an issue as well.
I mean, I think there was a lot of confidence that Bitcoin could scale if you talk to the smart people, and that it would have to happen modularly, like it's in layers, like it's happened now. But you're right, the concrete, protocol of Lightning didn't exist yet, and so actually that is the narrative that a lot of these altcoins were built on. Is like, we have way bigger blocks, we have much more higher transaction speed. Bitcoin can only do like 3 transactions a second. Like it's terrible. It's just so ridiculous looking back, right? But so yeah, that was a big one. Then they had narratives about, we are quantum resistant. If quantum computing takes over, then you can just crack the Bitcoin code and you'll be able to hack into any wallet. Like that was another like narrative. And then Ethereum's narrative in the beginning was like, but we have smart contracts. You'll be able to do JavaScript on the blockchain. Like, it was
the world
build
computer.
Your own. And then later that was also tied in with that they're faster than Bitcoin. So like you can compute on the blockchain, like calculate all this stuff. Whereas Bitcoiners were just saying like, look, this is a long-term project. Let's just build a stable base, like in a building, like build the foundation really stable. And then Satoshi always wanted smart contracts, but it's just a matter of doing it securely and safely. So it's really like walk before you run. So all that to me is a prelude. And so back in 2015, there was some discussion about, is the particular proof of work algorithm that Bitcoin uses, like, is it actually going to work out? Are there any, it was like the discussion about the unknown unknowns. Like, are there things that were not foreseen that could cause problems where maybe we do have a silver to Bitcoin's gold eventually, where there's a bit of a different trade-off? Because there were so many, of course, in theory, there was like, yeah, we'll put layers on top of Bitcoin, but like, I don't know, you couldn't, they weren't there yet. So it was just a lot harder to assess like how able is this particular Bitcoin code able to do, in terms of doing that. So that was my thinking about altcoins. I also was thinking about the analogy of, yes, there's going to be a long tail distribution, in a free market, usually there is a winner, but then there's a lot of like smaller competitors. So I looked at like programming languages where you saw that there's one really big one in terms of adoption, and then there's a lot of smaller ones, or like human language, like English is very dominant, Chinese, but then it trails off quickly. So that was kind of my thinking back then. And then gradually over the years, it just, to me, became more clear that no, Bitcoin is just a simple protocol like the shipping container, or like the what's another example, like TCP/IP, right? The protocol underlying the internet, like those kind of things. And so there's too many network effects to really want to switch to using multiple at the same time. It doesn't make sense. And in the report, I make the comparison with the nucleic acids protocol.
Love this section. Yeah.
A difficult way of talking about DNA and RNA. Basically, that is the way that information is encoded in the biological world. Like literally every organism uses this protocol to store the information of the physiology of animals and plants, and to pass it on. And so if you were to invent a new protocol, you would be up against all the, like, Darwinism would turn against you. Like all these organisms could attack you, just how like Bitcoin miners could switch and start attacking whatever new little network comes up and tries to compete with it. So there's a big moat there in the biological world, and I think also in the Bitcoin world.
Howdy, plebs. It is Dan here. I want to take a minute to talk to you about Crowd Health. What Crowd Health is doing in the healthcare space is nothing short of remarkable. If you're already familiar with Crowd Health, you can visit joincrowdhealth.com/BCB and use code BLUE for a tantalizing 3-month trial discount. As you probably know by now, the two of us are career firefighter paramedics. Nearly 70% of our calls are medical related, and we both rotate over to an ambulance. We're the first link in the chain in the healthcare system, and we see just how broken it is. Injured and sick patients stressed out of their mind, primarily worried about the incoming hospital bill. Crowd Health offers an extremely simplistic and workable alternative to traditional healthcare setups for a freaking fraction of typical premiums. It's essentially the decentralization of healthcare, leveraging the power of Bitcoin alongside healthcare crowdfunding to drastically uncomplicate healthcare and give back control to patients. Crowd Health negotiates bills for their members and finds them the best doctors and hospitals. Do yourself a favor. Visit joincrowdhealth.com/BCB. That's joincrowdhealth.com/BCB. And use code BLUE during sign up to receive a max discount crowdfunding request of $49 a month. Yes, $49 for the first 3 months. The Blue Collar Bitcoin podcast is brought to you by arguably the most legendary company in Bitcoin, CoinKite. They are the producers of the renowned Cold Card, the world's most trusted and secure Bitcoin signing device, built with a plethora of features fit for Bitcoin beginners all the way up to the most advanced of users. This device is a one-stop shop for your Bitcoin custody needs, and something the two of us have trusted for years. CoinKite also manufactures the Block Lock, a gorgeous e-ink digital display art piece sitting in the background of what seems to be every serious Bitcoiner on the planet. Block Lock can be programmed to scroll through key Bitcoin metrics, including price, hash rate, next halving date, and much more. Boy, oh boy, will this thing look good in your living room or office. They're also the makers of many other security and fun products for all users, no matter their technical aptitude. Support our show and get a delicious discount on CoinKite products by following our affiliate link on the screen and in the notes, and using code BCB for 5% off the Cold Card. Man, that theme of basically Darwinism and natural selection building off of the constancy of that nucleic acids protocol. That's akin to what you've alluded to and I mentioned a second ago of simplicity and immovability at the center, allowing for ingenuity and development at the edges.
Right.
But you're right. If you insert, and I'm just regurgitating you here, I think from this, I think it's your most recent piece that was in, if I remember.
Yeah, it is.
Which we'll also link. It's titled "How to Position for the Bitcoin Boom." Basically, I just love this theme of when you compete against that nucleic acids protocol, you're not just competing against the protocol, you're competing against all of the natural selection and innovation that's been enabled by that protocol. And that gets to the essence, the very core of why challenging network effects is so freaking difficult. Like Jeff Booth often says, you need a minimum 10x improvement to meaningfully compete with another entrenched protocol or industry or company. And this is why it's another theme that takes time to marinate for people before you put it on the grill, is that just to create another Bitcoin accomplishes absolutely nothing, because Bitcoin is so much more than Bitcoin. It's everything built on top of and growing and developing on top of, within and outside and around Bitcoin.
I think you just said that better than I did in the report. Thanks.
I'm literally just basically this conversation so far, Josh, has just been us reading Tuur and then
back to
telling Tuur
We're
what
just
he
prompting
wrote.
Tuur towards the LLM right now. We're just prompting him with his own prompts, and he's just doing all
it's
the work for us.
Same. I mean, we're all just kind of little cells in a big tissue. Because for me, it's the same. Like I read forums and I read things, and that goes into what I write.
Dan and I often joke about we're just a couple of clowns who love to read, and we love condensing this stuff into what we just regurgitated on here. Whether we do it eloquently or not, is up for debate, but that's what we do. Like, we're not the thought leaders in the space by any means, but
we do nothing, folks. And needless to say, Tuur's
engorging ourselves in information and then regurgitating it back out.
Needless to say,
I'm going to go ahead and do it again.
I was just going to say, we'll apply more butter to the muffin here and say that if you have not read Tuur, you need to. Or, sorry, go ahead, Josh.
Said more eloquently, more lube to the butthole.
I thought you were going to say more loop to the Bitcoin miner or something.
No, not at all.
No.
So so you mentioned TCP/IP and how that's the backbone of the internet. There was, I'm grasping for the competitor you mentioned in your report.
Oh, yeah,
Gopher,
that was
right?
actually
Gopher.
www, because there's
another. Oh, yeah, that's right. Yeah, that's the layer on top.
The World Wide Web. Yeah, the World Wide Web is the standard now. That's why we type in bluecollarbitcoinpodcast.com, or I forget your website.
Absolutely.
But there was a war going on early on between Gopher and www, and actually Gopher for a while looked like they were going to win. So yeah, we also discussed that in the report. People often forget, like they think like, oh, it was always this way. It's like, no. There's often fierce competition early on between industry standards.
Absolutely. But the way that you kind of enmeshed that back into the point was, you said that back in the 90s, if you wanted to get exposure to the internet, you had to find yourself some kind of .com company to invest in, or some company that was doing infrastructure, some play around the infrastructure of what it was to become the internet, right? But now with Bitcoin being this base layer, we have direct access to what is essentially an ETF. If you could go back to the 90s and you didn't have to take exposure on pets.com or Google or Amazon or one of the other myriad of 10,000 failures that there were, you could simply buy the protocol itself, which wasn't possible then. But now with Bitcoin being this fundamental layer, which also has this coin that you can buy that's associated with it, that makes it the entire point of how it runs is this coin. You can have what is essentially an ETF exposure to everything that's built on Bitcoin by just simply buying Bitcoin. I thought that was a very powerful way to look at it.
Yeah, Trace Mayer has, this is years and years ago, but he made the comparison of Bitcoin being like a highway network, like with cars on it. And, it just zooms value all across the planet. And so by that analogy, it's like you get to own part of the highway and some of the cars that are driving on it, and actually own it. Whereas an ETF, even there's still third-party risk. But with Bitcoin, you can actually really own the backbone. Yeah.
That's a name I haven't heard in a long time. Whatever happened to Trace Mayer? He just kind of disappeared.
Trace Mayer, it's still around, going strong. I'm sure we'll hear more of him in the future. He's one of the absolute legends. He's definitely deserves the label of the very first Bitcoin analyst. Like, he was writing a crazy Bitcoin price targets back in 2011. He first wrote about Bitcoin when it was 5 cents. Like, I'm like, I'm boasting. It's like, oh, it was $5. It's 5 cents. You're talking about a market cap of like, I think it was like not even $1 million or something.
God,
Maybe
that's
like
so
$5 million.
unbelievable. Like people that have the foresight
and
for
he
that.
came from the gold world. Like he came from the world of gold and also privacy. And then he's also he has a master's in accounting, so he had this really great way to analyze Bitcoin. Like definitely a lot of the concepts about network effects and just things that we use all the time come from Trace Mayer.
That's why
Did
I
you
kick
interact
myself
with
in the
Andre?
ass so much because I mean I was a huge gold bug after 2008. I read about Bitcoin in 2011. Remember thinking this is never going to work. God, I just kick myself in the ass every day. But you can't go back. It just is what it is.
I mean, like I remember for my newsletter, I was researching this startup from Italy that was doing cold fusion. LENR, low energy nuclear reactions, and they had like built this thing, and they had proof that it worked with videos, and like they were raising money. So, but that was a scam. So that's the thing with Bitcoin as well. Like early on, there's so many things that fail. So we got to be careful to not have that survivor's bias of like, oh, I was stupid to not see it early on. It's like no, like a million things failed as well.
Right. That's a really important theme. It's easy to look back and kick yourself, and even from our vantage point, the 2017 environment, 2018 environment was different, and I think this gets back to like risk adjusted returns. And I think for someone that feels like they're late to the party, they're not, because it is easier and more comfortable to take a significant position size in this climate, in this environment, with these people entering the fray. Much more easier to do. Yes, the price is 30,000, but there's a lot fewer unknowns in 2023 than there were in 2020, than there were in 2017, than there were in 2012. And that'll continue to march forward. And I think that the risk components of this asset continue to decline precipitously as adoption moves out. So I just say that to encourage people not to kick themselves, because the opportunity is still there, and the downside, there's a safety net there underneath the trapeze that wasn't when a lot of quote unquote OGs got in, like yourself.
I think in 1 or 2 decades, no individual is going to do single sig transactions on the Bitcoin blockchain anymore. And so for you to be able to tell your kids, like I was sitting in my basement, like, sending a Bitcoin on the main chain, that makes you absolutely unironically an OG, in my opinion.
Yeah.
So that means all the Bitcoiners today, like, because you can only do 3 transactions a second, and the fees are going to go up. There's going to be days when a fee is going to be the equivalent of like $10,000 or something. Like, like it'll be like chartering a jet or something to like send a Bitcoin transaction on the main chain. And so that'll be like all the corporations are going to be doing that. And of course, wealthy Bitcoiners. So yeah, I think it's so early still. It's like spinning up your own mail server, like that kind of thing. Like who does that anymore? Your own email server. That kind of thing.
One thing I like about some of your work and how you speak about it is you do get very practical, because I think, especially even on a show like ours, Josh, we get into the macro, we get into the philosophical, we get into the tech, and there's people that have listened to 8 episodes sitting there thinking, okay, so how the fuck should I approach this thing? I really like your various allocation strategy suggestions. You've got insurance against systemic risks is one, Bitcoin as a speculative asset is another, and then early retirement bet is a third. And you do have the chutzpah to attach allocation percentages to these. Would you mind walking us through these 3 and sort of hand holding our audience who's like, hey, I get it, this thing's a big deal. How should I enter, and how should I think through allocation size?
Yep. I'm actually taking my report here. It's page 19.
Just read it,
because I want to make sure I remember it right. Yeah.
We've just been reading it, so if you go ahead and read it too, that's totally fine.
No, anyway. So I put it in 3 categories, Because I have noticed that when you talk to people, it depends where they're coming from. It depends how often have they heard about Bitcoin and what is their financial situation. So like, there's not one way to invest in Bitcoin. And so roughly
Also, what are the
speaking,
size of their balls? Because that's if you're going for early
Right.
retirement, you better have some cojones to hold on.
Yeah.
Right, or how much do they know themselves? Because I think that if you know yourself and you know you struggle with volatility, you know, it's very wise to actually have a lower allocation. You might actually end up better financially in the long run.
Yep.
And you'll
Totally
have
agree.
more less gray hairs on your head. So what I mentioned earlier in as we were talking is the idea of Bitcoin as an insurance against systemic risk. And that's where I put 2 to 5% of your portfolio as a percentage. And the reason it's so high, because if you think about it, like homeowners insurance is only about 0.25% of the value of the home that you pay per year. So why put it so high? Well, on the one hand, you could say, well, you know, you just buy 10 years worth of insurance right away, so that's 2%. But there's another argument, I think, to be made that in some ways the kitchen is already on fire. You know, like, you know, the bond market is actually kind of crashing. If you inflation correct global bonds, they're down 30%. And this is like one of the largest pools of assets in the world, and one of the most considered to be conservative investments is down 30% over the last 3 years in purchasing power. So anyway, so yeah, 2 to 5% of your wealth as an insurance against systemic risks. So if there's a big bank run and your bank does not get a bailout, because last year and a half we've been seeing lots of bank runs and they all get bailouts, then Bitcoin really is going to protect you, in my opinion. So then another way to look at Bitcoin, if maybe you're a bit younger, is Bitcoin as a speculative asset. Because let me quote Doug Casey here. He's one of those legendary libertarian investors.
I used to get his newsletter.
Oh, really? Very cool. Yeah,
way back in the day.
Actually, I gave him a physical Bitcoin. He has a Casacius Bitcoin.
Does he?
I met him in
That's
Argentina
cool.
back in 2013. Yeah, a very interesting guy. So he defines speculation as such. He says, a speculator does not allocate capital in order to grow a business or create something. He simply takes advantage of distortions in the market to increase his personal share of existing wealth. Most speculative opportunities have political roots, taking advantage of distortions created by laws, regulations, taxes, or other government action. And so if you're taking action to protect yourself against inflation, that is speculation. So I feel like we often like put away speculators as like, oh, they're gamblers and this and that. Actually, not. Like, you can be a conservative person and engage in speculation because you want to protect your family from inflation. But it's just a different mindset from like a value investor, like a Buffett, who's like, oh, well, I'm just trying to grow this business and it's, you know, it's cheap now, so I'm going to buy it now. Like, you could do that in the 19th century under the gold standard. But so anyway, so in my opinion, Bitcoin fits in that like speculative category. If you want to protect yourself against inflation, Bitcoin is a great hedge. So that's why 5 to 10% allocation in order to help offset either losses during the bust phase of the business cycle or value erosion during aggressive spikes of inflation. And then the last one, which I remember back in 2015, I did roughly the same categories. And the way I published it was via DocSend, this website. And I could actually see which page of my report got the most clicks. And the one that said like, Bitcoin as an early retirement bet, like that was the most popular page of the whole report. Which, I mean, it came true, right? Bitcoin was
and all those people that read that are retired now.
$250. So that's like 100 times. So that was 1% of the value of today. So you would have done 100x.
Josh, there's our episode title, by the way. There's the hook right there.
That's it.
That's your hook. There you go. So yeah, early retirement bet, because of course Bitcoin is way more mature than it was then. We've had way more adoption. I think the safety element is way higher. That's why I suggest 10 to 50%, 50% of your assets in Bitcoin if you want to bet on early retirement. And of course, this is more geared towards younger people in general who have, less of a
Right.
large saving pool. But that's still one significant exposure, 10 to 50%. So that's how I look at Bitcoin investing.
Yeah, I've had older family members approach and talk about this, and obviously it would be very bad advice to ever tell anyone that's anywhere near retirement to expose themselves to 50% of Bitcoin, to 50% to Bitcoin, because there's just no telling what it does in the short term. Even 5 years from now, we can't confidently say this thing's going to be 10x bigger in 5 years. There's no way you can, realistically do that.
Yeah. What if you need surgery when the price is like down 70%?
Yes.
Right?
Yeah.
Yes.
You don't want your relatives eating cat food because you told them to put 50% of their income or their retirement into Bitcoin, and now you got to support them. So let's keep this realistic. Younger people who've got more time to recover from, an issue or have a 40-year runway before they need to retire. I think it's a proposition that makes sense for some people.
And strong, reliable cash flow and plan Bs. You hinted at it earlier, Tuur. Too much Bitcoin can mean that you end up with less in the long run. I think through anyone that's aware of Bitcoin, Tina, he publicly divested from some of his stack earlier. I don't know, it was like last year or something. I think he's still got a huge percentage of his net worth, probably somewhere around 50%. But he took some risk off the table. He's just like, I cannot afford for this thing to go down to, I don't know what the numbers were. I'm pulling things out, 10, 15K. Like if that happens, he's irreparably harmed. And what he's doing is selling way more Bitcoin than he's comfortable with. So too much can mean less for certain people. These really big allocation strategies are for younger, incredibly cash flow consistent individuals. We're as bullish as anyone, but just don't be stupid. Don't get completely raptured, especially because you have to consider it's very likely you're probably people may be listening to this podcast 2 years from now when we're in the middle of a bull run and they've lost their freaking mind, which I get. We've been there. But a lot of time, you're most raptured by the asset, Tuur, is when public hype's the highest. And so people have a tendency to get emotionally wound up, and a lot of Bitcoin, you have to earn your stripes for a few years because the chances are good you entered high and you're going to have to go through the low.
I was going to add, and consider even the best case scenario where you put a significant amount of your wealth in Bitcoin and you're on a rocket ship and Bitcoin goes up, 5x in a year. If you're in the US and you sell within that first year, you're going to face really steep capital gains taxes. Really steep.
Daddy Uncle Sam's going to take you to the washers.
Right. Yeah. And then it's tempting to be like, oh, but I'm not going to pay it now. I'm going to postpone it. And then by the time you enter the next year, maybe the price going down and all of a sudden anyway, so it gets really messy very quickly. And it doesn't mean that it cannot be a potential strategy, but it's just keep in mind, do a bit of back of the napkin calculations before you invest, just to be like, okay, what are these different scenarios that are possible here? Even if I'm as bullish as I am, all right, let's write out the bullish scenario. When I'm going to sell a little bit, how much taxes is that going to cost me? Okay. What about the ABC? What is the medium scenario? Okay. And then now what is the bad scenario? And then be like, okay, am I okay with all three? Yes. All right. Let's check with the wife as well. Is she okay with that? Okay.
Right.
Now we can go. Something like that. Yeah,
having a plan like, oh, okay, if this number is hit, I'm paying off my house and I'm saving enough to pay taxes in that scenario if it happens. That's a plan that is worth pursuing for a lot of people. Like that just makes your life easier. And it's not all about just getting extremely rich. Saving your money and investing your money is about making your life easier. Like, I think it's a huge win if you can get yourself out of debt, just simply that. And try to retain as much Bitcoin as you can, but there's nothing wrong with taking some risk off the table, taking some exposure off and, divesting even into some other assets when you've seen that this thing, did what you expected. And you don't need to YOLO everything into a single asset, even though you might have huge expectations for it, or you think it's going to be worth $10 million in 20 years. Like you still got to live your life.
The hard thing is as well is that in these bull runs is that oftentimes it kind of at least in the Bitcoin's history, it has coincided with all other speculative manias that happen at the same time. And so even though it's easy to mistake the world for yourself sometimes. Like, I'm a conservative guy, I just invested this much in Bitcoin and now it's going up and I'm on this rocket ship. Keep in mind that a lot of the other people who are piling in and pushing the price real high, they may not have diamond hands like you do, right? They may be just very opportunistic, YOLOing, Wall Street bets, all that stuff. And so all of a sudden you're on a train and 80% of the train are degenerate gamblers. So like, keep that in mind too. Like, you can like, it's just, I just find it, to me, is one of the biggest challenges is to not mistake the world for myself, is like to not assume that everybody else has the same mentality that I do. And so it's hard actually to not get caught up in the speculative mania once you're on
very
it.
hard.
Like, I mean, we both were there when Bitcoin went to 65K. I thought we were going to go over 100. I really did.
So did I.
Yeah.
It was such an unexpected thing for it to do what it did, that double top where it faked everyone out. The pump fake got everybody. Everyone expected that same crazy fervor straight up like in 2017 or what was it before that, 2013 or 2015. Anyway, yeah, it totally pump faked that time. And it's kind of like what you expect out of markets. Expect exactly what you don't expect, because when everyone is in the same direction expecting the same thing, more often than not, something very unexpected happens to the majority of the participants.
Start9 operating system is a full-fledged, cutting-edge Linux operating system. Its functionality and adaptability make it an excellent choice for the users who value simplicity, efficiency, and privacy. Running a Bitcoin node? Start9 is your go-to solution. Setting up a node has never been so easy. With a Start9 server, backups are more than just an afterthought. At the push of a button, create encrypted backups, ensuring your data stays safe and sound, out of the reach of big tech companies. Start9's commitment to security goes even further. StartOS is encrypted for all LAN communications. This ensures your passwords and assets are always protected. The StartOS marketplace of apps includes everything from Lightning to secure messaging apps to secure password management. If you care to be sovereign in the digital age, running a StartOS server is a must. And the best part? You can download and set up StartOS on any machine, or you can purchase a plug-and-play Start9 server directly from Start9. Choose Start9 for a secure, streamlined, and flexible computing experience. When Dan and I are at the firehouse and we have finally delivered the orange pill to a new plebe, we recommend Swan for their first Bitcoin purchase, always. Swan has the user interface absolutely nailed. We have seen people go from no-coiners to Bitcoiners in under a minute. It's just that easy. The problem with sending friends and family to other exchanges is exposing them to all kinds of BS. You will never see Swan encourage your friends or family to buy Dogecoin. Instead, Swan educates. Swan produces some of the best educational content in the space. That is a big freaking deal. The difference between somebody who buys on a whim and sells for a loss and those that hold for the long term is simply an education gap. We have been using Swan to dollar cost average into Bitcoin every single day since 2020. If you want a family member to turn into a Bitcoiner, there is no better place to go than Swan. For daily DCA, IRA, or education, Swan is the place to go. You can try Swan Premium on us for free. This includes exclusive Swan content, market insights, and other discounts. Click on our link in the show notes and use password BlueCollarBitcoin.
Right.
And it's also extremely hard to be a contrarian. It's so hard to be a contrarian. You get caught up, right? Everybody's excited. And then in the bear market, everybody's apathetic.
Totally. I also think a cautionary tale to the novice crypto bro who has not yet been fucked by the long dick of capital gains tax. Like, one thing we've found is that and this is a beautiful thing in a lot of ways, but it can also be a little bit of a trap, is there are a lot of people that get into Bitcoin and we would say, unfortunately, more broadly crypto, that have no trading, finance, even real investing background, right? This is their introduction to financial infrastructure. And so they're not just taking gains into USD during bull runs, they're moving from token to token, creating all these different taxable events, and then sitting there in the bear market unaware that capital gains even exist. Like, we've seen this, we've watched this. I've shared a conversation on the show of me saying to someone like, oh yeah, like how did that work? You move that stuff, like what's the deal with the capital gains, just out of curiosity? And the person was like, what are capital gains?
Oh my
And I was like, oh my God,
Yeah.
dude, holy fuck. And yeah, certainly you could maybe take some losses or whatever, but people are, a lot of them, completely blind to this. And so if you are that new crypto entrant and trader who's riding some high and thinking this is easy, be very careful when and how you're moving coin. Now you can take the outlook of like, oh, I'm going to stay dark, dude.
No.
And I don't mean to be,
no.
I don't mean to be like a statist cuck here, but I will, because people will knock on your door. And it's not like people in this space are the only ones using digital tools. Josh and I have gamed out unbelievably realistic scenarios that are obviously occurring and will occur more, where the IRS also has tons of tricks up their sleeve with data. There's some simple queries you can run on the places people are trading and onboarding where they don't even need an agent. They can write an algorithm that says, if someone did this and they haven't done this, send them a piece of mail. And that's going to increasingly happen. So just be careful if you're out there trading. And Josh couldn't resonate anymore of like the point of Bitcoin is to empower average individuals, right? Both here in the United States, our demographic being the middle class and below, but internationally. And if you're harnessing an empowerment tool but creating exorbitant stress in your life, it's doing the exact opposite of that. And at least our early crypto experiences, because to our audience is aware, but we were similar. We had this diversification outlook of kind of a minority crypto position with a big Bitcoin position. But even having that and messing with it and moving from thing to thing, I just remember being stressful and messy, and we paid some of the consequences of some of those moves from a gain standpoint that I just articulated.
Absolutely, yeah, absolutely. And keep in mind, like, I mean, I know that it's only going to be a fraction of a percent of your audience who even thinks about, dodging taxes, but like a blockchain is designed to store everything forever. So like you're gonna run the rest of your life, it's like no, like no, just don't. And by the way, I shared this like tweet that I did in 2018. It was I don't know if you see it in the chat there. It's like this guy. It's like a festival, and there's all these porta potties in a row. And there's this dude who's like running on top of the porta potties. Meanwhile, he's being like pelted with like beer bottles. And I wrote, it's like, this is the average crypto trader facing the IRS in 2018. Like, because in the end, he does get hit in the head and he falls off. It was brutal. Early 2018, when the bear market hit, like people realized, like, oh my God, I'm waking up from this gambling daze.
Yeah.
Like DAZE. Yeah.
And I have to pay the hooker, and it's expensive. I'm in Vegas. I just had a great time in Vegas, but my flight's in 2 hours. I owe the hooker $3,800. I can't see straight. Yeah. And that's what happens when you wake up after a fucking crypto
it's like
orgy.
walking into a Wild West saloon as somebody who's just you're walking in, there's a bunch of ruffians, like you're on Binance, like there's a scammer everywhere. And when you get to the door, you're going to get robbed on the way out by the IRS.
And then there's this Bitcoin oasis, man. That's just so fundamentally different. Go ahead.
I think you're in a way it's a joke, but you're actually correct that there's so much more shadiness and fraud and shenanigans going on in the world of crypto at large versus Bitcoin. Bitcoin really is a bit of an oasis. Like for sure, you can get screwed in Bitcoin. Like and there's no bailouts, and you got to be real careful. And probably Binance doesn't have all the reserves. Like they're probably going to go bust at some point, and so you got to be careful. But Bitcoin as a platform is not designed to screw you over. Like imagine how much more in danger you are if you start engaging with a coin that's actually designed to get all your money, like to steal from you.
Yeah.
Yep.
I actually tweeted this morning. I'm going to read a tweet. The conflation of crypto and Bitcoin is what we've been referring to as Bitcoin camouflage for years. In our view, the connection between these two in broader discourse presents an opportunity for those who recognize their foundational differences. The former, that being crypto, is primarily an innovation in VCs scamming retail with limited to zero use case. And the vast majority of tokens are deeply disempowering for most of society, especially the middle class and below. The latter, that being Bitcoin, is a truly decentralized, radically inclusive, barrier-breaking, accountability-inducing, equitable, and sound crack in the friction-filled walled garden that is 21st century global finance. To dumb that down, these two things are not just different, they're foundationally different. And I would argue especially so for average Joes who are totally lost in this massive blur of complex 21st century finance and really have no fucking idea where their allocations are even going in retirement, right? Here comes this simplistic, empowering protocol. This is the whole point of what we're up to, that is really tailor-made for a fireman, right? And crypto, at least the way we see it at this date and time, and we just covered this in our last basics episode. It was titled Bitcoin, Not Crypto, but it's not just different. It's totally the opposite. But back to the camouflage comment off the top, that's part of the reason there's a buying opportunity. Because when investors sit here, especially when you think about institutional finance, big family offices, companies, whatever, they are looking at an absolute circus. And they think Bitcoin is kind of the elephant in the middle of the ring. If you really study, you see that it's not, but it's understandable. Yeah. I have sympathy for people that still have the two conflated, but that is an opportunity for the little guy right now.
And what you're outlining there is basically information asymmetry. Like if you're listening to this, and if you've listened to this for a period of time, if you're engaged in a lot of these other Bitcoin podcasts that have people that understand what they're talking about and are proliferating this information to you, you have an asymmetrical advantage over probably 99% of people out there. And that is the advantage to you buying this thing right now, akin to buying the internet protocol in 1995, that makes it such a huge advantage for you and your future and your family's future, because that advantage is what's giving you the edge to be buying this thing at 30,000 instead of buying it at 150,000 or 500,000.
Absolutely. So, yeah, and like there's so many wealthy people who are still so confused these days. Like they're into crypto, not realizing that they're super underallocated to Bitcoin. And so like if these people, like once they figure out what's actually going on, Bitcoin is going to go up that much more. Like I totally agree.
Yeah, the Mark Cubans of the world. I haven't heard him peep much about crypto or Bitcoin in the last year. He must have
Raoul Pal, Mark Cuban, like a lot, and those are the louder ones. But there's a lot of them. You know, if you talk to family offices or just people who are like very serious people that really sit on a lot of wealth, who are still to this day very confused. Or I mean, to an extent, there's also opportunism where they feel like they can. They just think one step. They're thinking of it as a product that the crowds are going to buy. Like they're like, they don't eat their own dog food, but they're like investing in it because they think people are going to like this idea, which is always a bit tricky, I think. By the way, there's also a fun analogy between Bitcoin and fighting sports. Because like, how like in the 80s, there was all this like bullshito, like all these like weird guys that like had their own martial arts and they could like from a distance like knock people to the ground and stuff. And then MMA came along and it's kind of like, sure, if you think you're amazing, like come into the ring, we have some basic rules and there is like anybody can fight anybody. And so in a way that did away with so much of the bullshito, because there was a mechanism to verify whether you were the real deal or not. And I feel like Bitcoin is kind of the MMA ring. It's kind of like where, if you think you got entrepreneurial skills, like, let's come into the Bitcoin arena, show me what you got. Like, don't just issue your own coin where, you know, like Vitalik talks about that sometimes, where like we get to make our own laws of physics. It's kind of true what he's saying. It's ridiculous, but it's true. In his little universe, he can just make up whatever he wants. And then it's easy to win. Like you rig the game in your favor. But like, what about coming to Bitcoin where there are no bailouts and there are no DAOs that are going to be hard forked away? You just get to compete with these basic rules against the rest of the world.
Yeah, get in the ring. I was just going to say that. Alan
talks about
book,
this.
Bitcoin is Venice. I think it's the first chapter, isn't it, Dan? When
we talked to him about
Brazilian Jiu-Jitsu.
We started our episode with him, talked about martial arts and Bitcoin for, I don't remember, 20, 30 minutes. I think we talked to him like a year ago.
He writes about that too, Yeah,
it's interesting that, but it's get in the ring. Let's see. It's Mark Zuckerberg versus Musk here. Let's see what actually plays out. And By the way, I think Zuckerberg is going to, if that actually does happen, he's going to mop the floor with Musk. That dude he's serious. I want to put you on the spot here for a second, Tuur. I know you write so much about the potential coming bull market. Do you have expectations for what you expect to see during this one? Do you think it's going to be kind of play it by its normal book, do another exponential run up to some obscene number, and then kind of duck for cover again for a few years? How do you see this playing out?
Yeah. There's actually there is this thesis of the what is it called again? The mega cycle? No, the super cycle.
Hyper Bitcoinization. Super cycle.
No, well, the super cycle of Bitcoin, where it's like, this time we're not gonna, have a big bear market again. It's just gonna kind of keep going up because the money is melting down meanwhile. And that's kind of a model where, how like you see these Bitcoin price charts that are logarithmic that kind of like have an arc to them like that.
Right. Yep.
And so a lot of
almost
people
like the adoption curve.
Whoa, but people think like, oh, it's going to go like that and then level out at $1 million. Like that's going to be the shape of it. But then if you look at adoption curves, which, to be fair, it's a different scale because you're talking about percentage of the population that adopts it. Yes. But usually those ones are S-shaped. Like they go like this, right? With kind of like that.
Yep.
And so anyway, there's an argument to be made that if we can see a similar shape in the Bitcoin price, where at some point we're actually going to speed up again. Whereas in the beginning we had a big speed up from 2010 to 2012, where we had massive percentage of gains, and then it leveled out more, and we could actually go up very fast like that again, which is kind of the Weimarization of the price. Like a gold ounce didn't change in quality during the 1920s. Even though the price went to $1 trillion marks, it was just the money that melted down. So anyway, I don't think cycles are going to go away because human emotion is just always there. And if once people believe that something is a sure thing and everybody bets on it, that disproves the theory. And that means we're going to overshoot and we got to correct. And so there's always going to be, but I think nominally speaking, I think the crashes are going to become a bit more shallow and shorter lasting, just because the inflation is going to be running up more and more over the years. For this cycle, I think I like the saying of like, there's no fever like Bitcoin fever, because people said that about gold in the past, right? If there's a gold rush, it's like there's just nothing like it. And so you can't say like, oh, it's got to be another one of those run-of-the-mill Bitcoin cycles, because once you're in it, it's insane. You get these rallies that are just like, holy hell, we just doubled in price. Like this is trading like a penny stock, right? This doesn't happen to assets that are like $500 billion. I think people are going to be surprised at how high we can go in this cycle. I think in the report I say north of 120,000 because I want to be, I want to kind of have a reasonable confidence band of what I predict, but we could go way higher than that.
You mentioned
it's going to be a wall of worry, right? We're going to have corrections on the way. It's going to be that's why it doesn't go up in a straight line. Like, people have to adjust to this new environment, and a lot of people are going to feel FOMO. And then anyway, so on the chart, it's going to look probably similar, but it's just the environment is going to be different. There's going to be more political hostility towards Bitcoin. So I think some of the pullbacks, remember back in 2017, the pullbacks were often about trust in the Bitcoin system. Like, oh, is there going to be another, I don't know, a big block? Are they going to win or not? Like, it was this kind of like weirdly civil war, like an internal conflict. And I think now the scares are going to be more like some big government that makes like a big statement or cracks down, or, I feel like that's more what we're up against.
Absolutely. You mentioned Weimar, Germany, something that I've studied a lot, and I know Dan has too. The gold price during that decade was extremely volatile. It whipsawed up and down as people regained confidence in the mark, as people lost confidence in the mark. I think comparing this to that is probably apt, but it's also, I want to remind people, don't get greedy. Expose yourself to as much as you can reasonably, but don't start leveraging, because if you start leveraging, you get whipsawed back down and you lose your entire investment in that situation. Leverage is your enemy in this, especially when things are volatile like that. Unless you're, a 1% trader, just don't expose yourself to that, because you're just going to get yourself a lot more gray hairs, as Tuur said earlier.
Was it
I
you,
would maybe
Tuur, that
tweak that. I would maybe say like make a separate bucket if you're gonna like add leverage. Like make a separate bucket, keep it below 5% at all time. Don't allow yourself to go above it. If it goes to 0, you just lost 5%, because you're gonna spend 5% of your assets to pay off the debt. I mean, of course, if the price goes down, that percentage might go up, and you might end up losing 20%, even though your initial leverage was only 5. So anyway, like, because it's one of those things where, like, yeah, don't drink, but if you're gonna drink,
yeah,
do it responsibly. Yeah,
it's like with the Weimar thing. If you went too long gold early, you ended with no gold. Back to what we were saying earlier, but that's so mind blowing when you think about what gold did. I think it was you, Tuur, that wrote in one of your pieces. Maybe it's someone else. Sorry if there was something to the effect of, if you heavily invested in, I don't know, video streaming in the 90s or something, you lost everything, or something along those lines. Like, you can be early. The timing and the technology need to match. And so you need to hedge those risks if the timing and the investment aren't there.
Yeah, I think I even say that in the report, in the section about whether you should invest in Bitcoin startups, because I think Bitcoin is a sure thing, in my opinion. I'm fully allocated in terms of conviction, but that doesn't mean that every Bitcoin startup is going to be great. Some of those are going to be overestimating what Bitcoin can do in the short term. So they're going to be the equivalent of having a video streaming company in 1999, which, by the way, is what Mark Cuban kind of had, right? He had that, and then he got a big exit, and then it went
Yahoo,
to,
I think.
Yeah, and then it just did nothing because it was way too early. Like, it went to 0.
I've heard him talk about the timing on that. He just got purely lucky. He sold 6 months before the whole .com crash. I mean,
perfect timing.
Gotta have good timing,
I think Russ Hanneman actually in Silicon Valley in the show is a little bit based on Mark Cuban, because I think ROI was his company. This is a digression, but this is a fictional comedy show.
I've seen a few episodes.
His company was ROI. It was like radio on internet. So it's like, I think it's like a pun. It's like a little jab at Mark Cuban.
We could. The problem here, Josh, is the next questions that I'm thinking about asking are going to end up in another 40 minutes. So I think I'm going to use the self-control not to, unless you got something you really want to throw in, because this hour and a half has been,
awesome.
Really, really spectacular, Tuur.
We'd love to have you back on another time, because there's a myriad of questions we could go at from here, but we want to be conscious of your time. Do you have any handoff you want to give to your work or your Twitter handle or anything?
Yeah, if people Google my name, I think the first link is my Twitter handle, and then adamantresearch.com, ADAMANT, from like adamantium or adamant. That is my research company. And if you go there, there's a backlog of my previous reports that you can just download there. And then there's also a link to my latest report, which is How to Position for the Bitcoin Boom. It's 20 pages. It's the best I got. It's really meant for, on the one hand, investment professionals. Like, it has value for them, but it really is very purposely written to be accessible for family and friends, because literally that's what I did. I sent it to family and friends as well.
It's very well done. Highly recommend it.
And each one of these pieces has been written, if you backlog them, Josh, at fairly opportune times for the investor. Obviously, past performance doesn't guarantee the future, but you've been very timely with when you've chosen to publish these, which is at least a reason to check them out if you haven't and you're listening. Tuur, we'll do this again. Appreciate you. Until next time.
Yeah, it was fun. It was fun. Appreciate it.
Thank you.